Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 6th of August, 2019, and we're asking the question, has the world gone mad? Or are we seeing examples of deliberate disruption? Let's investigate. Whilst IS was enjoying his birthday weekend at the De Vere Hotel, Tortworth Court, a beautiful location in the picturesque county of Gloucestershire, a brief video of which we are using as a backdrop to this video, little did he think that such turmoil would be caused on a Monday morning. In his weekly update on Saturday, he did warn subscribers that there was a possibility that this week may indeed see gold and silver prices rise, both in sterling and dollar terms, but in truth, he did not expect the turmoil to happen quite so soon, thereby ensuring that prediction. On the weekend, or at Friday's close, gold stood at $1,446 and £1,185 in sterling terms. At the time of writing, gold is now $1,473, some $27 higher, and in sterling terms $1,210, some £25 higher. On the weekend, the Dow Jones Index closed at 26,485, already down 707 points on the week. Now it's currently 25,861, down another 600 points, recovering a little from the 767-point fall yesterday. Even silver, which has been a laggard to gold, has seen its price rise from $16.20 to its current $16.50. So what has happened? Well, a host of things occurred yesterday, not least of which being a severe escalation in the trade war between China and the United States, one of the red flags we've been highlighting continuously. We pointed out in our update that President Trump had tweeted that he is imposing an additional 10% tariffs on virtually all Chinese imports, some $300 billion worth, with effect from the 1st of September, thereby reversing the dollar strength, raising gold and silver prices, and adversely affecting stocks further, with tariffs possibly rising to an additional 25%. We've also stated in other videos not to be surprised if China retaliates, and worse, delays any deal with the United States, hopefully adversely affecting Trump's prospects of winning the 2020 election, so that they can deal with a more accommodating Democrat president. Well, they made another step in that direction yesterday. The Chinese government devalued the yuan, falling below its 7-to-1 ratio with the US dollar for the first time in 10 years. A weaker currency could soften the tariff blow the United States has dealt China. The weak yuan ignited fears on Wall Street that a currency war has begun, or that the United States would respond with even higher tariffs, prolonging the standoff with China and potentially weakening the global economy. Investors are particularly concerned that the Trump administration could try to devalue the dollar, sparking a currency war that could weaken Americans' purchasing power. Now, in case anyone thinks this is a good idea, well, one foreign exchange global macro strategist by the name of Viraj Patel from Arcera isn't one of them. He tweeted out yesterday, quote, "Risks of Trump intervening in foreign exchange markets have increased, with China letting the yuan go. If this was an all-out currency war, the US would hands down lose. Beijing is far more advanced in playing the currency game and has bigger firepower." Unquote. Former Federal Reserve Vice Chairman Alan Blinder also commented yesterday, expressing his concerns about a competitive currency war where each country devalues their currency to attempt to gain a competitive edge. And to quote his words, quote, "No one benefits from a currency war," unquote. Whilst it's unlikely that the US government will intervene directly in the foreign exchange market, though the Treasury could, If traders think it's a real possibility, they will do the work for them and start selling dollars. Now, we've been saying for weeks and months that China will do whatever it takes to support its economic growth, and if that means QE or quantitative easing, currency devaluation, increased government spending, it's whatever it takes. Its leadership is also not truly answerable to its electorate, unlike the United States. Well, the White House retaliated by accusing China of being a currency manipulator, and Secretary Mnuchin will engage with the IMF to eliminate the unfair competitive advantage created by China's latest actions. Good luck with that one, Secretary Mnuchin. The greatest fear is, of course, that President Trump puts additional pressure on the Fed to reduce its rates. And one has to simply bear in mind, and we've mentioned this before, it's the relationship between currencies that is the important factor. So if, say, all currencies devalue by the same amount, then they are in the same position they were in before devaluing. And this is the currency wars that Jim Rickards referred to in his book with that title back in 2011. A little light at the end of the tunnel, though, here is that whilst China's central bank said today that Washington's currency move would, quote, severely damage international financial order and cause chaos in financial markets, unquote, President Trump brushed aside concerns, and Larry Kudlow, the director of the White House National Economic Council, confirmed that he was still planning to head a delegation to meet with Chinese officials in September. But this wasn't the only thing that happened yesterday. Gun control issues raised their head due to the mass shootings, and if you pardon the pun, the president was under fire for not necessarily supporting strong enough the gun lobby. Today, President Trump has imposed sweeping sanctions on the Venezuelan government, freezing its assets in the United States and barring transactions with it, thereby causing more destabilization. And we ourselves have received some concerning reports regarding Iran, which we are expecting to be announced within the next 48 hours. And let's see if what we've been told comes to fruition. We don't wish to set a hair running in case the information is inaccurate. However, we shall know in 48 hours. The president is also picking a fight with Google over its liberal bias. And the former US Treasury Secretary, Larry Summers, has said he does not expect the United Kingdom to secure a trade deal with the United States soon after Brexit. This is what he says, quote, "While this is at the top of your agenda, in the United States we have an election that will be more preoccupying than any presidential election in the last 50 years. We have economic conflict with China, and even on top of that, the deterioration of the pound is going to further complicate the negotiating picture. We will see it as giving Britain an artificial comparative advantage and make us think about the needs to retaliate against Britain, not to welcome Britain with new trade agreements. Britain has much less to give than Europe as a whole did, therefore less reason for the United States to make concessions. You make more concessions dealing with a wealthy man than you do dealing with a poor man. Britain has no leverage. Britain is desperate. Britain has nothing else. It needs an agreement very soon. When you have a desperate partner, that's when you strike the hardest bargain." Unquote. Is there any wonder why sterling has fallen yet again? So the question we're asking, and the purpose for the title, is President Trump deliberately choosing many of these conflicts? His poll ratings, as far as they can be believed, are not high, and yet the economy is arguably strong, depending which side of the fence you sit on. Trump knows that to win next year's election, the economy has to be stronger, and he has to win certain battles with enemies, the trade war being one of them. To help achieve this, he needs lower interest rates. And as we have said before, the Fed has already admitted that one of the reasons for lowering rates by 0.25% last week was to head off political and economic uncertainty. Well, Trump is creating even more uncertainty. Is this in the hope of even lower rates? Or will this all backfire? As other parties say, we will not now kowtow to the United States. At this stage, none of us really knows for certain. But what we do know is that there will always be consequences. And to think, it's only Tuesday today. On top of all that, the ISM non-manufacturing figures, which were announced yesterday, came out at 53.7% against expectations of 55.5%. So yesterday was not a particularly good day, although my birthday was a good day. Today is still weathering the storm, and we all wonder what tomorrow will bring. Let's wait and see.
We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.